Excellencies, distinguished guests, ladies and gentlemen, good morning and welcome to what we think will be a very high-level discussion today about the future of energy production and consumption on a sustainable way. I would like to kick off today's discussion by briefly commenting on two issues. First, on the global economic and geopolitical context, and second, which is even more important, the state of Europe efforts, and we have also the Commissioner Secretary here with us, and we thank him to be here, to render its energy sector more competitive and more sustainable. As always, major economic, political and geopolitical developments feed into and at the same way affect energy market and vice versa, so they are very, very strongly linked. So let us start from the global economy, and unfortunately I have to say that what we see is really a risk of a continued stagnation at best. Advanced economies recorded a drop in export due to weakness of a lot of emerging economies and also the depreciation of their currencies, and deteriorated condition in financial markets, moreover, and also a general decline in consumer confidence are impacting the propensity for companies to invest. If you look, for example, to the US, the growth data of the second quarter, 0.3 of GDP growth, confirmed disappointing first quarter growth, which was 0.2 in the United States, and also the business spending, as I said before, including also the oil and gas sector, are decreasing also due to uncertainty on the global demand. U.S. productivity growth, U.S. has always been a very strong champion on productivity. The forecast is below what was projected before, and also the before-tax corporate earnings are at the worst since 2009, so it's not a good data. Increasing uncertainty and weak international demand are impacting as well the euro area, and we had the Q2 growth, which was half of the first quarter, so 0.3 compared with 0.6. And this, moreover, what we see in Europe is strong differences of growth between some countries which are doing well, such as Spain and in a certain sense also Germany, and other, like unfortunately Italy and other southern countries, which are doing less well. The British economy is still doing well, but this data was for the period before the Brexit vote. Then what happened there, we don't know exactly. In Asia, Japan reported zero growth, with weak demand at home and also overseas. And for what regards China, China is likely probably to see a further slowdown in 2016. Even more, the last data are raising hope for a kind of stabilization in the Chinese growth. Other economies are in a phase of great difficulty, we know that, due for some of them to weak commodity price, which are depressing the performance of producing countries, and for other countries due to political factors, and we know what's going on, for example, in North Africa, as well as Brazil, Russia, or Turkey. So all these factors, as I said at the beginning, are reinforcing the negative global momentum, and probably the GDP growth in 2016 will be lower than the one we saw in 2015. So this, let's say, seemingly intractable problem of prolonged global economic stagnation are weakening the perceived competence of national governments. There is a problem in the confidence that people have towards the national governments, and also faith in free market. What we are seeing is like a reemergence of force and belief against free trade, against globalization, and in favor of nationalism and protectionism, and this is a strong concern. Just to say something, that we see a very strong opposition towards TTIP on both sides of the Atlantic, and I have to say that also the only European government which is clearly in favor of TTIP is the Italian government, and I see here our Minister Calenda is always saying that he supports TTIP. On the geopolitical level, it is particularly worrying to observe increasing of also political tensions between great powers. We saw this in Syria and also in other parts of the world, together with rising number of civil conflicts and failed states. So coming to the energy, at the same time, the global energy landscape is becoming more and more unpredictable. If we just look at the last 36 months and the major developments, we see how the oil price collapse was not attended, and also the advent of ISIS in Iraq. Everything took us by surprise, and also, as I said before, we had a surprise on the Brexit vote, and all these things are, of course, affecting. We don't know exactly what kind of impact they will have in the medium-term growth for our countries. 2 months from now, we know this very well, the US election will decide between candidates with strongly different views on energy, climate, and geopolitics, and I will add on everything else. But despite the increasing uncertainties, which appear to have become a kind of structural characteristics of this time, nations must anyway implement a long-term plan to reduce the impact of energy production and consumption on the world's climate. So even if we have a lot of uncertainty, nations and also companies have to decide how to plan to reduce the impact of energy production and consumption on the world's climate. And from this perspective, Europe needs urgent action. We really believe this, to correct the effects of policies which have lowered its competitiveness very clearly and slowed its path towards a sustainable energy system. So Europe has now reached a kind of stable level of energy demand in which there is the need, first of all, to leverage the huge investment made so far to build a sustainable future, starting from the fragile condition in which Europe finds itself. The EU is losing competitiveness, I want to underline this very clearly, suffers severe fragmentation of its energy market, and is a net importer of energy, with around 70% of the gas imported and little less than 90% of oil having to be imported, and with an unsustainable energy mix in which coal accounts for about 28% of power generated and produces 76% of the EU's total emission. And in a certain sense, this is a little bit ironic and disappointing, considering that in 2008, Europe was the first continent in the world to set challenging targets on climate change, introducing binding quantitative commitments for emission reduction, adopting a carbon pricing mechanism, and heavily subsidizing renewables. In 2014, subsidies in the EU totaled around $75 billion, which is around 55% of the worldwide subsidies to renewable. This was, in a certain sense, a wise and visionary strategy, but it did not include any control of the energy mix, and so ended up increasing energy price, lowering Europe's industrial competitiveness, and actually increasing the use of highly polluting coal for power generation, cancelling a major part of the environmental benefits which were gained from renewables. This is not a question, we know this very clearly. Renewables will surely be a major part of our energy future. We are very convinced about that. However, they need time to be fully developed, and they especially need support from an existing, clean, affordable and flexible source of energy. And the best source to play this crucial role is natural gas. Strengthening the role of gas, which is abundant and in close proximity to Europe, seems to be the only concrete way to support the decarbonization process and reach European goals in terms of security and diversification of supply, a challenge that has become increasingly urgent in recent years. In fact, in 2000, the EU produced more than 50% of its need of gas. This is now less than 30%, and in a few years it will go below 20%. So this is a problem. But there are several levers that place Europe in a favorable position. Firstly, we can rely on one of the biggest energy infrastructure in the world, capable of importing 60% more than the current demand, and which include 465 BCM of pipeline capacity, can handle 200 BCM of LNG. This is thanks to the huge investment that have been made over decades. Just to give you an idea, in the last 20 years, we have invested more than 65 billion euro in regasification capacity, pipelines and storage, increasing import capacity by around 40% and storage by 50%, the net result of which is a large excess of import capacity, which we can take advantage of it. Second, considering its geographical location, Europe can make the most of the discovery of new gas supergiant in the East Mediterranean and East Africa. I'm sure then Claudio Descalzi will talk about this. Finally, the oversupply of the LNG market due to the rise of many new gas suppliers around the world will add new volumes coming to Europe, including from the US, and will reduce the prices. But leveraging the efforts of the investment made in past decades is not enough. What I've said until now is how to leverage and take advantage of the huge investment. But we have to do more to build our energy security model and complete an integrated gas market. In Europe, we need policies that encourage the exploitation of gas resources and mainly the implementation of a common regulatory framework to ensure harmonized rules for transportation and storage, enhancing transnational trade while guaranteeing converging pricing throughout different markets. We have to increase and improve the physical connection between national markets, removing the major existing limitation to transporting from west to east and from south to north. This can be easily solved by linking existing infrastructure and increasing reverse flow connection. So we need to make this our main priority in Europe, and this can only be done if we move forward together instead of 28 nations with 28 different energy models and sets of policies. We need to do this as part of a supranational plan for a clean energy mix of gas and renewables and the further diversification of energy sources. Only if we go into this direction, we will achieve an efficient and sustainable energy system, which also lowers EU energy prices, which are now 4 times US prices, enabling Europe to be competitive again. Maroš Šefčovič, European Commission for Energy Union, reaffirmed the central role of natural gas less than 2 weeks ago in a very lucid description of the Commission energy strategy in Budapest. I quote him, "Gas," he said, "will have a central role to play in our economies for decades to come. Natural gas is a relatively low-carbon fossil fuel and offers a cleaner and a lower carbon fuel option for transport than many other fossil fuels." Gas and renewables may also provide, and I'm finishing, a path for Europe to strengthen the economies of troubled nations of the southern and eastern shores of the Mediterranean, while at the same time strengthening its own energy security. The arch of instability, which stretches from North Africa to Turkey, is producing very negative effects also here in Europe. Promoting the development of natural gas and renewable energy will help countries of the southern and eastern Mediterranean generate much needed funds to invest and develop and jobs creation. Favoring energy imports from them not only helps us to diversify our supply, risk away from over-reliance on gas from Russia, but it also cements a relationship with countries with which, in many senses, also from an historic point of view, we share a common destiny. We sincerely hope this opportunity becomes a reality. We in Europe need to intensify our relationship with these countries to help them get the most out of their natural resources, and doing so, we will also be doing what is best for ourselves. Thank you very much.